All right, good afternoon, everybody. How are we doing on this Thursday afternoon? Look at you, Craig, ahead of the game there. All right, audio and video coming through good. All right, well, let me get our recording going and let's get moving forward. Hey, Andy, how you doing? All right, well, let's get going here. All right, well, welcome everybody to the Nadex Application and Strategy Webinar Series. My name is John Skelton. I'm with apexinvesting.com, and this webinar today is brought to you by and hosted by Nadex. And today we're going to talk about trading volatile markets with Nadex binaries. Now, some of you may be like, hey, I'm new. What does that mean? What does volatile markets mean? Well, we're going to talk about that a little bit here. Kind of show you what a volatile market is and some different ways to trade it. You know, some people are like, hey, I can't trade when the market's volatile. It's swinging way up and then it's swinging way down and then it's swinging way up. And, you know, it's not just a clear one-way trend for the day. You know, it's not clearly just going straight up. It's not clearly just going straight down. It's just up and down, but not just up and down a little bit like it's choppy and zigzaggy. It's moving way up, then moving way down and way up and way down, and I just can't seem to get in at the right time, or I'm up in profit and then it goes down. How do I trade this? And so we want to focus on that a little bit, give you a couple ideas of some ways you can trade a volatile market. So let's get our disclosures knocked out here. Trading futures, options, or any financial instrument involves risk. Any examples used here today are not a recommendation to buy or sell or a solicitation to buy or sell futures, options, bonds, Nadex binaries, or spreads, or security of any kind. Also keep in mind that, you know, if I do show you the Nadex platform today and I do show you an example of an order being submitted, it is on my demo account. It is simply just for educational and informational purposes only, of showing you how to place an order on Nadex, how the platform works, how the order entry tickets work. It's in no way a trade recommendation or trading advice. And any information here in this webinar, again, is educational, informational purposes only. Past performance not indicative of future results. So for some of you that are brand new, you know, some of you might feel like, hey, I'm brand new. This webinar sounds great, but you know, some of this is just really over my head here. And you know, where do I? Let me get back there. I'm sorry. You know, where do I start? Where do I get some basic information? I'm a newbie here. If you hop on over to the Nadex platform, I want to bring your attention to just a couple of things here. First of all, if you go right here to the Learning Center, and you go right here to webinars. This tab here will show you any upcoming webinars in the future. So you know what subjects are being covered in the future. You can get signed up and registered for those webinars. You know, get a reminder email that those webinars are coming up. You know, down here you've got videos, trade examples, handbooks, frequently asked questions, just a ton of free education and information for you as a new trader. But if you go right here to Webinar Archive, all right, this is very important. And right here it says filter by presenter. If you go down and find us right here, Apex Investing Institute. This webinar that we're doing today is being recorded, and this is where the recording will be if you want to watch it again later. But you can also go back and watch past webinars that we've done, okay? And just a few weeks ago, for example, went back and covered the basics for, you know, for those of you that might be brand new. Back to the basics with Nadex spreads, back to the basics with Nadex binaries. These webinars here, I just kind of step in, hold you by the hand, and walk you through, you know, for someone that says, hey, I don't know what a binary is, I don't know what a spread is, I don't know how they work, I know nothing. You know, take my hand like a 5-year-old and walk me step by step through it. And so that, we kind of did that a couple weeks ago and built that foundation. And, you know, and then I did like right here, common mistakes with Nadex spreads. You can go back and watch all kind of videos here about the basics of what are they, why are there so many different ones, what are the top mistakes people make with binaries, you know, understanding the platform. Then we talk about different strategies and systems, all kind of free information in here, just a library wealth of information that you should go through. I mean, this is free education from start to finish, definitely take advantage of it, okay? Something I have to give Nadex a lot of props for is they focus a lot on providing their members with free tools and free education, okay? Another thing right here, if you go to the trading platforms, right here you can go online direct to the Nadex trading platform. They do have a mobile app. You can trade straight from your phone. On the platform, you not only have access to the order entries and all the instruments, but they give you charts, they give you indicators, just a ton of great free tools there. Right here under Demo Trading Platform, this is an incredible tool that you guys just totally need to take advantage of. In fact, in a couple weeks here, I'm going to be doing a webinar about how to make the most of your Nadex demo account, and to talk to you about how do I transition from demo trading into live trading. A lot of people struggle with that of, hey, how long do I need to stay in demo? What do I need to accomplish in demo before I feel or should feel comfortable going to live? How do I make that transition? And that transition is a big key for a lot of traders. So definitely make sure to join us on that webinar. I know a lot of people need that. But all you have to do is create a quick username, fill out some info, and hit Open Demo. A few minutes later, you're going to get an email from Nadex with a temporary password, and you can log right into the Nadex demo platform. They'll give you a $25,000 free demo account. All right. What you can do as soon as you get in there, you can go up here to My Account, and you can go right here to My Account, and you go right here to Settings, and then Password. And you can change that temporary password they send you into a password of your own that's easy to remember, okay? And so they'll give you a $25,000 free demo account, all right? It's a great place for you to go in, get familiar with all the different instruments that Nadex has to offer, the different expiration times, how they all work. Great place to go in and learn how the tickets work, and how to open a ticket, and how to enter and exit orders, and just get a good feel of the platform with a demo account, not with your live money. Also, if you're learning something new, if you're trying to learn a new strategy, learn a new system, you want to do that in your demo account, not with your live money, right? For example, what we're going to cover today, all right? I'm going to show you a strategy today. Don't hop off this webinar and go pop this strategy in your live account. Practice it in your demo account. Get it down, learn how to do it. Once you've got it mastered in your demo account, you're profitable in your demo account, then you can move over to live trading from there. And then once again, join us in a couple weeks here, and we're going to talk a little more about that transition from demo to live. So again, take advantage of all the free tools that Nadex has to offer, okay? Once again, I'm with apexinvesting.com. Apex and Nadex, two complete separate companies, all right? Nadex is an exchange. Apex, we're an online education-based company. We're a group of traders helping traders. We have over 20,000 members. We've got live trade rooms. We've got trading strategies, trading systems, indicators. A lot of our systems focus a lot on risk management and probability. That's why we love the capture risk products of Nadex. And we're traders just like you. We trade Nadex binaries and spreads every day ourselves and in our room. And we're an education partner. We do these webinars for you. And again, these webinars here are just to help give you an idea of what is Nadex, who is Nadex, how are some ways I can utilize the capture risk products that Nadex offers into my trading strategy or system. Again, my name is John Skelton. I've been with Apex now for about 3 years, almost 4, as head of operations. I've got a background as a stockbroker and in banking. And again, I'm an educator and a trader just like you. So that's kind of who we are and what we're here to accomplish for you. So take advantage of all the free education. So today's topic, what is a volatile market? How is that different from a range-bound market? What is a strangled trading strategy? How to pick the right binaries, and then understand your entries and exits, okay? So real quick here, for some of you, this might be very basic and very elementary. But this particular strategy we're going to talk about today, we do with out-of-the-money binaries, okay? And if you're not real familiar with what out-of-the-money binary is, you can go back to the webinar archive that I just showed you and get a little more information about it. But just a quick summary here. if we were to look at these binaries right here, all right, this is a list of the binaries that expire at 2 p.m. on the small cap, the Russell 2000. Over here, we see where the indicative price is right now, right? It's at 1407.4, okay? Something we know with the binary is at expiration, a binary is either worth 0 or 100. So if we look at these binary strikes here, for example, this one right here, 1405, all a binary is a statement, right? The statement says the U.S. small cap will expire greater than 1405. It's just a true, false, yes or no statement. Well, we're saying it will expire above 1405. Well, where is it at right now? It's at 1407. So this statement is already true, right? So if this statement remains true at 2 p.m., it'll expire in the money, being worth $100. So notice I can buy it right now for $76. Well, we know a binary is worth 0 or 100. Why is this one priced so close to 100? Because again, all we're saying is it'll be above 1405, and it's already above that. So the statement is already true. That's what's called an in-the-money binary, right? Now, let's take a look here at this one that's priced closer to 50, okay? Or these right here, this one right here, priced closer to 50. Okay, it's priced a little less. Well, why? Well, because it says the market will expire above 1407.9, and right now it's at 1407.4. It's very close, right? It's right on the fence. So the first one we looked at wasn't right on the fence. It was a lot closer. You know, the market was above the strike, so it was priced closer to 100. Why do you think this one was priced closer to around 50? Because right now it's kind of right on the fence. It's 50-50, right? We've got a little time to expiration. The strike price and the market price are right about the same. So by expiration, does it go to one side of the fence and expire above, or does it go to the other side of the fence and expire below? It's kind of right on the line there, right? The probability is kind of like 50-50. We're not sure yet as to where the probability of this one down here was much higher because it's already a true statement. Now, what about this one down here? So we saw a price at 75, we saw a price at 50. Now this one's only $15. Well, but look at the statement. You can never buy a binary just based on the price. You got to look at the strike. This statement says it will expire greater than 1412. But where's the market now? It's down at 1407. So what has to happen for this binary to expire in the money? The market has to go up from 1406 all the way up past 1412, right? So the market, what? Has to move, right? It absolutely has to move. Okay? Does that make sense to everybody? So that's why it's priced a lot lower, because it's a lower probability. You can look at the price of a binary kind of like a probability. So does that make sense? When you look at this strike ladder, if you find these right here about 50, draw an imaginary line right there, okay? Because what is this? 1406.5, 1406.5. See that? When the strike price and the market price are right around the same, you're going to be priced around $50. Why? Because it's kind of a 50-50 probability, right? It's right on the line there. Is it going to go up and expire in the money, or go down and expire out of the money, right? Kind of 50-50. When your strikes here are lower, now we're talking about buying, when it's lower, that means it's already in the money, so it's a higher probability, right? But when it's up here, the market has to move way up there, so it's a lower probability. Does that make sense to everyone? Any questions on that brief overview right there? Make sense? Yes, no? All good? Okay. So let's ask a quick question though. All right, so the one thing we know, for example, is if the strike price and the market price are around the same, going to be priced around $50, right? So we've got 44 minutes to expiration. So let's just say in that time, the market starts moving up. Okay, I'm not talking about at expiration. I'm talking about between now and expiration, the market starts moving up. If I had bought this binary right here, okay, if I buy it right now, as an example, and I buy it for $12, all right, and let's say the market moves up. Right now it's at 1407. Say the market moves up to 1412. What will this binary be priced at that time? Not at expiration. Let's say we still had some time to expiration. If the market goes up from 1407 to 1412, okay, I buy it right now for about 10 bucks. The market goes up to 1412. What will it be worth? Yeah, Marvin, you know exactly. It'll be worth around 50, right? Because we know when the strike and the market are around the same, that binary is priced approximately at 50. Okay, so if I were to buy this for about 10 bucks, the market moved up there, and that binary is worth about 50. Do I have to hold it till expiration and see what happens, or could I get out right then? Does anybody know the answer to that? No, I do not have to hold it till expiration. I can get out early. And so approximately what type of profit would I make if I bought something for 10 and it moves up and I could sell it for 50? That'd be about a $40 profit in that particular example. Okay, so just wanting to show you there that with these lower priced out of the money binaries, okay, like in the teens and in the 20s, if the market starts to go in that direction, okay, you can see that value start to go up, right? Does that make sense to everybody? And we know that if it gets to that strike, for example, it'd be worth around 50. But if the market goes up in that direction, if we bought something real cheap and the market goes in that direction, that value is going to increase, correct? But now, let's take a look at this example. I mean, what does the market have to do? It's got to go from 1307.1 to 1407.1 to 1410.7. So how many ticks is that? This particular, the Russell ticks in 0.1. So, you know, it's like 1406.8, 0.9, and then we got 1407.0, 0.1, 0.2, right? So we've got, what, 40, that's about 40 ticks. So that's a pretty good move that we need on that particular binary, right? 40 ticks. So, hey, yeah, I understand I can buy it real cheap. The market moves up. Great. I'm going to get some profit. But that's a pretty good move there of 40 ticks, right? So if we were ever going to buy a binary like this, what do we have to know or expect is about to happen? A pretty good move, right? For this to really go up in value. Okay, now this next one down, it's like $18. Well, it's at 1409 and the market's at 1406. That's a little bit less of a move that has to be made to get up closer to it, right? And that's why it's priced a little bit more. Okay, does that make sense to everybody? Just a quick general overview. If you're going to use these lower price binaries, you have to be expecting a good move in the market for them to go up in value. And you have to keep in mind that you don't always, okay, like for example here, if we click this one and we say, hey, I want to buy this one. Okay, well, it shows you right here on the order ticket. Max loss is $18.25, okay, because that was what, okay, if we bought it now, max loss would be $17 because that's what I'm buying it for. My max loss is what I buy it for, right? And if it expires in the money, it's worth $100. So my max profit is 83 bucks. Oh, nice. We like that, right? But what you have to keep in mind, and there's plenty of times that you can do that, you know, with big market moves, but you have to keep in mind, you don't, with these out of the money binaries especially, you don't always have to hold until expiration. Okay? You don't have to. You can buy something low, let the market go up and it increase in value, right? And get out of it. Like I said, for example, if I bought this one at $17 and it moved up to being worth 50 or 60, I could get out right then and just take my profit, right? Now, would I feel like, oh man, I missed out on profit? Well, I might, but what happens if the market comes back down the other way and expires worthless? And I could have just gotten out of it with a 300% return, right? So you have to keep that in mind. You can exit early, okay? So that is an out-of-the-money binary, okay? So you understand probabilities and how they work. And you understand if you're going to use out-of-the-money binaries, movement is needed, okay? Movement is very needed. What if you had a market that's just standing still? Like it's just not doing anything, okay? It's just kind of like sitting there. Like, look at this market right here kind of overnight. The market's just kind of like sitting there. It's not doing much. Is this where you want to trade an out-of-the-money binary when the market's just not doing much? What do you think is going to happen if you buy or sell an out-of-the-money binary when the market's just kind of range-bound, just kind of sitting around doing nothing? Are you going to be profitable on that, or is it probably just going to, well, there went 17, 20, or 20 bucks, right? Does that make sense? You do not want to use out-of-the-money binaries in a sideways or range-bound market. Does that make sense? Pop yes or no there in the question box. Let me make sure everybody's alive and following here. A little question for the class. Okay, great. All right, so you don't want to trade those in a range-bound market. All right, you need movement. Okay. So we understand what an out-of-the-money binary is, the lower price binaries. And we also understand as the market moves in our direction, those binaries are going to go up in value. And we can exit early. Okay? So one of the things that I personally like to do when I trade out-of-the-money binaries is I don't always hold them to expiration. Usually what I'm looking for is, it's a low risk trade and I'm looking to go for a 1-to-1 risk reward ratio. What does that mean? Well, that means if I'm basically looking to double my money. Okay. If I'm going to get this binary right here for $17 and for about 17 bucks, let's just say I buy this binary for about 15 bucks. And it goes up and it's worth 20 bucks and I get out of it. I want to take my profit, right? Well, okay, is that a decent return? What is that, 25% return? Is that a decent return, technically? Well, from a return aspect, 25% is not bad, right? Or 30%. But if I'm doing that on every trade, I'm risking $15 to make 5. So if I lose one trade, how many wins do I have to have just to make it back, to break even? Yeah, I could have 3 wins in a row just to get back to break even. Don't you feel like you'd probably be spinning your wheels with that kind of strategy there? Where like, oh look, I won. And then I lost one, I'm back to 0. I won, right? But if I have a 1-to-1 risk reward ratio, which means, I'm going to risk 20 to make 20. Yeah, Ted, exactly. It's very frustrating, right? Because you feel like at the end of the day, you just spun your wheels and you're at break even minus fees and you're down, right? But if you have a 1-to-1 risk reward ratio, let's say I'm going to risk 20 to make 20, right? Then I'm 1-to-1. So at that point, what percentage do I have to be right on to break even? If I'm risking 20 to make 20, I only have to be right half the time to break even, right? Everybody understand that? Risking 20, making 20. If I'm only right 50% of the time, I'm at break even. So if I can have a 1-to-1 risk reward ratio, but be right 70% of the time or 80% of the time, I've found a good trading strategy or trading system that, has a rate of 70, 80%, and I'm risking 1-to-1, then I'm in the money, right? Okay, and that's something you have to be careful for. Where you hear people out there talking about, oh, I've got this system that wins 80% of the time. Okay, or I have a system that wins 90% of the time. If you heard somebody say, I have a system that wins 90% of the time, your interest is piqued, right? Because you're like, oh, no way, really? And you want to jump on that, right? But does that mean anything at all if you don't know the risk to reward? Okay? What if I told you, let me give you a quick example here. This is a little off topic, but it's very important. Let me find a good example. All right. What if I told you guys, hey, I have a strategy that wins 80% of the time? Really? Look at this binary right here. We understand that pricing correlates with probability. If I told you I have a binary that wins 85% of the time, really? You have a strategy that wins 80%? I want in. Okay. What would I make off this binary right here if I bought it for $84, almost $85, and I would make $15, right? Okay. And it wins 80% of the time. So out of 10 trades, if I made $15.50, right? $15.50, 8 times. 15.50 times 8 is what? $124. I'd be up, right? So if I'm profitable 8 times out of 10, how many times did I lose? 2, right? Everybody with me? And those 2 times, how much did I lose? $84.50. So yeah, Marvin, I'm down $170. So of the 8 times I was profitable, I made $15.50 8 times. So I made $124. Sweet. Won 8 times in a row. I think I'm a trading god. I'm loving it, right? I'm the man. But hey, I only lost 2 out of 10 times. But what did I lose each time? $84.50. I lost $170. So I'm negative $50. I'm $50 in the hole, plus my fees, plus all my time for making 10 trades. All because, but I have an 80% win rate. So you guys see what I mean? The winning percentage doesn't mean much of anything. Don't get caught up in that when you're researching trading systems and trading strategies. I mean, yes, a high win rate is nice, but there's more to it than that, right? Okay, let's look at an opposite example. What if I told you that I have a great strategy, but it only wins 25, it's only profitable 25% of the time. I lose 75% of my trades. Is that going to be a strategy that you think you're going to want to be interested in, or most likely not? Show of hands, make sure everybody's following me here. Who's going to jump on a board and go, oh, I want to teach me a 25% win strategy? Yeah, most likely not, right? Okay, SG exactly. Well, let's look at it. Yeah, Ted says, no way. Don't teach me a strategy I only win 25% of the time. Who wants that? Well, let's look at this binary. If I said, all right, let's buy this binary right here for $24. And let's look at that. We talked about probabilities, right? So let's just call this well, the probability number is actually between these two numbers. So let's just call this a 20% probability, okay? So let's say this strategy only wins 20% of the time, okay? So that means I'm going to lose 8 times, right? So what would I lose? Let's look at a different one here. Let's make this easier to, right here, right around 30 bucks, okay? Let's call this a 30% win rate, right? So I'm only going to win 3 out of 10 times, okay? So, yeah, and this, yeah, Kurt said it. Psychologically, I can't lose 70% of the time, even if my risk reward makes it a winning strategy. Yeah, it psychologically does mess with you, okay? But let's take a look here. So if I've got a 30% probability, 30% success, that means I'm going to lose 7 times, right? And what am I going to lose 7 times? I'm going to lose about 30 bucks, right? 30 times 7 is what? 210. Okay? So I'm going to lose, if I lose 7 times and I lose 30 bucks each time, I'm down 210. So I'm only going to win 3 times. But how much do I win each time? How much do I profit each time? 70 bucks times 3 times is 210. So I'm actually at break even there. Does that make sense? If I lose 70% of my trades, so I lose 7 out of 10, I lose 7 times 30, I lose 210. I only win 3 times, but I win 70 each time. I'm at 0, I'm at break even. So wait a minute. What you're telling me, John, is that 80% strategy you just showed me lost you 50 bucks. But a 30% winning strategy got you at break even? That doesn't make sense. Okay, so you see what I'm saying, guys? You cannot just, I'm not promoting one or the other here, by the way. Okay, my point is, when you're looking at a system or strategy, you cannot just only look at the percentage of the win rate. You have to also look at, what am I risking? What is my risk to reward? Okay, does that make sense? Tamara says, oh, that's interesting. Yeah, you got to look at both sides, okay? Because you have to figure out which side to tweak, right? Because if we take it down a step, what if you had a 30%, what if you had a system that was only 30%, right? But you were doing this. Seven trades out of 10. How much am I going to lose? 10 times 7, the loss of what? 70 bucks, right? So I'm losing 7 out of 10 trades, but I only was profitable on 3 trades out of 10. But I made $90 a piece on those. 90 times 3 is 270. So I made 270, I was down 70, now I'm up $200. Okay, we went a little off track there, but I wanted to show you guys some of those examples. Some of you probably never thought of it that way. Okay, so you have to look at the percentage of probability of the system and also compare what is my risk reward. Okay, because One might sound great. Hey, my risk to reward is 1 to 3. I'm only risking X amount of dollars to make 3 times as much. Oh, that's awesome. Yeah, but how much, what's your probability? How often does that happen? You have to look at both sides. And for some of you, especially as newbies that haven't quite got that, that's why you might not quite be as successful as you want to be, because you're focused on one side. You're focused on one number. Okay? So, a little bit of a tantrum there, talking about one-to-one, but hopefully that kind of gave a few of you some insight. So let's kind of move back here and get moving forward. So we understand what out-of-the-money binaries are and what volatile markets are. Look at this chart real quick here, and don't be overwhelmed by this chart. This is an Apex chart with some of our Apex proprietary tools. Let me just break a few things down for you real quick so you know what you're looking at here. So follow with me. All right, so we have our bars here, right? And these particular bars are 6-tick diagnostic bars, okay? These are not minute time-based bars, although you can do some of these strategies with minute bars. I just have tick-based bars on here, okay? Do you see these squares, okay? You see this square, you see ends right about 1240. This one ends right here at 1300. This one ends right here at 1320. This one at 1340. Notice those are 20-minute increments, okay? I can set these squares to end wherever I want, every 10 minutes, every 20 minutes, or every hour. Well, as you know, Nadex offers 20-minute binaries on the US indices. And that's what I was trading here, was 20-minute binaries. So I have these boxes to end every 20 minutes so I can get a good visual picture of what it's doing during those 20 minutes, okay? But these boxes are called our expected range indicator. What this indicator does is it basically looks back a few months and it looks at each particular week, each particular day of the week, each particular hour of the day, and then each particular minute of the hour. And what has the market historically done on Tuesdays at from 1220 to 1240 or whatever. And it kind of puts an average in there. And it's an expected range of high to low, okay? Meaning for this 20-minute period, you know, historically in the market, you know, if the market started right here at the beginning of this 20-minute period, that's normally the highest it goes. That's normally the lowest it goes. Or that's where it, you know, historically would close or not close. So it's kind of showing me a range of, hey, historically, this is the highs and lows the market makes during that time. Make sense? Easy enough. Okay. Down here, this is our expected volume indicator. Do you see this yellow line? Okay. This indicator kind of does the same thing. It looks back historically of what is the typical volume of this particular market at this particular day of the week, hour of the day, minutes of the day. What's normally the volume in this time, right? And that yellow line is showing historically that's where the volume is. Okay, so you see where the expected volume is going should be. See these blue graphs right here? You see the blue graphs did not get up to the yellow. That means for this little time frame here, volume was lower than the expectation. What do you think it means when volume is blowing past the expected level? Hey, that is higher than normal volume. Volume is higher than historic, higher than expected, higher than normal. So the yellow kind of shows historically where it should be. The blue shows currently where it is. Does that make sense? Because this is really right here a very important aspect. Okay, it's very simple. Yellow is where volume is expected to be historically. Blue is where is it? You understand that? When blue is blowing past it, it's higher than expected volume. When blue is below it, it's lower. You see that? So just looking at this chart, you can kind of see for yourself what's happening right here when volume's a little bit higher. We've got some movement in the market, right? What's happening right here when it's really blowing through? See this? See when it's really blowing through? The market moved way down. And look, it moved outside of its expected range box even, right? It moved a lot. Can everybody see that? Like, does that make sense? Okay, I know that was a quick run through there. Let me pull over this chart. Look at this chart we were just looking at. Same thing at the bottom here. What do you see right here? Do you see volume higher than expected overall in this area or lower than expected? Yeah. And so it just makes logical sense. If there's not a lot of volume and there's below expectation volume, the market's probably just going to kind of what? Just kind of sit there, right? So remember I showed you this part of this chart earlier, and I said when the market's just doing this sideways, do you want to trade one of those low-priced out of the money binaries? When the market's just not doing anything? No way. When do you want to look at trading? If we're going to trade an out of the money binary, what do we want to make sure we have? Movement, right? We need movement. So I don't want to look at trading out of the money binary when I don't have a lot of volume or exceeding volume. So if I scroll forward on this chart, what do we see start kind of happening on the blues here? You see it? Mega volume. Yeah, Tamara, not just, okay, it's meeting expected volume. Hey, we're breaking it. Hey, we're breaking it a lot. Do you see it? You clearly see the difference, right? It's not hard to understand this. Like I just taught you how to use this. And what did the market do? From here to here to here to here, the market's moving. You see it? Okay, so that particular indicator is very powerful for us over at Apex when I'm trying to figure out, what do I trade? Do I trade an out of the money binary or do I trade an in the money binary? Because if the market's flat, right? If the market's kind of flat, I might want to trade an in the money binary, right? Where I'm selling a binary up here, saying the market won't go any higher than this because I'm not expecting it to, right? But when I see this happening, do I want to sell an in the money binary saying, oh, it's not going to go past this? No way. No way. I know the market's doing something, okay? Now, have you seen days where, okay, the market's moving straight up in a trend, or it's moving straight down in a trend, right? Those are the good, easy days. But have we seen, right, Tamara, have you seen days where it spikes up and spikes down and spikes up and spikes down? It's not really choppy because there's actually some good moves, but it's up and down moves. So, hey, there's a lot of volume. The market's moving, but it's not clearly telling me that it's going up. It's not clearly telling me that it's going down. I'm not sure what direction it's going, but I know it's going. Right here, for example. Okay, so you understand the power of this expected volume indicator, but do you also understand the power of these expected ranges? Okay, to where I'm expecting the market to stay in these ranges. So look at the market right here. It came down, it went up, it came down, it went up, went way down, right? It came from towards the top of this box all the way down to the bottom. Then it went all the way up to the top of this box and then towards the middle, then all the way to the bottom and then shot through. That's a volatile market, right? It's not just sitting here doing nothing right in the middle of the boxes, okay? Imagine if you were looking at this chart and the market was just zigzagging right in the middle of these boxes, just for a long time. That's a choppy market, right? It's just sitting in the middle. But when it's popping up to top of range and bottom range, top of it, volatile market, and what do we have? Boom, 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 right? Volume blowing through. Can everybody see that picture? I don't want to spend too much time on this. If you want some more information about this, you can hop on over to Apex and ask us. Does that make sense? So I'm trading, so I'm looking at 20-minute binaries here, okay? And you can see right here for the 120 expiration, okay, which would mean it would expire to right here at this box. So that means these are 20-minute binaries, which means they opened at 1 o'clock, okay, and they expire at 1:20. So we're looking from here to here. So I would have got in right here at 1 o'clock, right when the market was right here. Okay. So what am I looking at? I'm seeing that what happened the previous 20-minute periods. I'm seeing the market came down, came up here, came way down. And I'm seeing this higher than expected volume. So I know that the market's volatile and the market's moving, right? But I did see volume decrease right in here. So as I'm going into this next 20-minute period from 1 to 1:20, I saw that volume decreased. But then what do I see? Do y'all kind of see a stair-step ladder-looking thing here? You see it? It decreased, but then look, you see that little stair-step? It's building, it's building, it's building, right? Gets up to expected and it breaks. So I know, or I'm thinking, okay, I'm expecting there to be some volatility in this next 20-minute period, right? So I want to get into a 20-minute binary. But is it going to be volatile and keep going down? Is it going to be volatile and go up? Is it going to go up and then go down? I know it's volatile, but I don't know which way it's going to go, right? Y'all ever been there, like, especially with like a news event? Hey, this news event's coming out and I'm expecting it to be a big move in the market, but I don't know. Is it going to move up? Is it going to move down? I know I'm expecting movement, but I don't know which way to go, buy or sell. So in cases like that, how can we do both? Okay. Well, let's take a look here at the orders I placed, all right? So notice this first one says what? -1, which means I sold it, right? This is just a screenshot from my platform. So I sold a binary, okay, at 42.77, okay? I sold it at 42.77, so I sold, let's see here, and then I bought for 42.87, okay? So I sold down here, all right, and I bought up here. So now let's just make sure we understand this, okay? If the market's right here, okay, like look where I bought, 42.87. That's way up here, right? But when I got in the trade, the market was right here live, right? So I bought an out of the money cheap binary way up here. And look what I bought it for, 15 bucks, right? Then I sold one down here, saying that the market could go way down there. Because again, I know it's going to move, but I don't know which way it's going to go. Okay, now don't reverse this, because there's another strategy that's similar to this that's opposite. okay? So I'm buying up here cheap, and I'm selling down here cheap. Because look, I bought this one for $15.50. So what is my maximum risk on the buy side? It's +1. I bought it for $15.50. What's my risk? $15.50. Okay. I sold this one for $86. So what's my risk? On the sell side, my risk is where I sell compared to $100. So it's 14 bucks. So I'm risking 14 here. I'm risking 15 here because I know it's going to move. I just don't know which way. So I'm buying and selling. All right. So what would have happened here? All right. So I bought and sold. The market moved way up here. And then I took this screenshot. Okay. So I bought it for $15.50. The market moved way up here. We're getting close to expiration. It's worth 70 bucks. You see that? So I bought it for $15.50. The market moved up. It's worth 70 bucks. So I'm up how much? $54.50. If I'd closed it out right there, how much would I have made on this trade? Bought it for $15.50. It's worth 70. I close it out with a $54 profit, right? Everybody see that? But if I had done that, would I have actually profited $54.50 on this overall trade? Well, on the buy side, yes, I made $54.50. But my sell side lost how much? $14, right? So I made 54 on the buy, but I lost 14 on the sell. So at the end of this trade, I would have been up about 40 bucks, right? Everybody understand that? Everybody see that? Did I lose anybody right there? Tell me now if I did. Okay, so I made 40 on the trade. How much did I risk on the trade? $15.50 and 14, so about $30, right? So I risked 30 and made about 40. So that's a 1-to-1 or better, right? Everybody follow? Now, let me play the skeptic. And some of you say, all right, John, great little webinar here. Great little, great little screenshot, John. Awfully convenient, John, that you took the screenshot right here when you were profitable, trying to show us this profitable trade right here. But, what happened was the market came down here and expired right in the middle at expiration, and you would have lost on both sides. Yeah, John, it's real easy to show the left side of the chart looking back. But doing this live, awfully convenient you took the screenshot and you're teaching us right here, right? And why am I calling myself out on that? Because I've seen a million people do it. I've seen a million little videos on YouTube and webinars where people look back at the left of the chart and, well, if you would have done, and it's bull, right? It's like, hey, that does me no good if I wouldn't have known to do it right then and there live. Everybody agree? You know what I'm talking about? Okay. So how did I know to take this screenshot right here and to exit the trade before it came back against me? How did I know to do that? Well, let's look at one other example and I'll tell you. So this right here was at the 120 expiration, all right? Look here, this is on the Russell for a 140 expiration, okay? I'm seeing some movement here. I'm seeing this start to build here, okay? So I wanted to get in this trade, okay? As I saw this start to build, I bought and I sold, okay? The market went way down. Same example here. I sold for about 83, so $17 of risk, right? I bought for 25. Yeah, right here the volume started to go down, but when I saw it start to stair step and pick back up here and then break, I got in. Does that make sense, Mark? So right here I sold for 83. So I'm risking 17. I bought for 25, okay? Saw this volume starting to build back up. I don't know which way it's gonna go. So what happened? Well, the one I sold for 83, I only risked 17 bucks on. And right down in here, how much was I up on that side? 64.50. Close out the trade. Well, I should have closed this trade earlier, but I was taking this screenshot. So I was up on the trade on the sell side. I made 64 bucks. But what did I lose on the buy side? 25. So did I end this overall trade profitable $64 or profitable about $40 because I have to take out this loss? Right? Everybody get that? But what did I risk on the trade? 25 and 17, so about 42 bucks. So I risked about 40 to make about 40. Everybody understand that? Now again, you say, yeah, John, it came down here, but look, it popped back up right before expiration. Or back on your other screenshot, hey, you conveniently took that screenshot up here, but then the market came down and you'd have been zero. Okay, how do I know when to close out this trade? What did we spend a lot of time talking about earlier? 1-to-1 risk-reward ratio, right? What did I risk on this trade? 15 over here, 14 over here. I basically risked $30 on this trade, right? So, John, you conveniently knew to exit up here and show us these nice numbers. When do you think I'm exiting the trade? If I risked 30 and I want to make 30, when do I exit the trade? Do I let it come way, way up here and then way, way down? Or do I exit the trade when I'm at 1-to-1? Exactly. Does that make sense? Does that kind of show you here that I'm not just kind of rewinding and trying to show you a great little example of a trade, but then it lost? No. I want a 1-to-1. That is when I'm exiting. Okay, so trick question here. Okay, trick question. I risked 30 on this trade, correct? So do I want to exit when this says plus 30? Yes or no? I want to do 1-to-1, so I want to risk 30 to make 30. So I risked 30. When do I exit? Do I exit when my P&L says plus 30? There's Mr. Mike Daugherty. How you doing, Mike? Okay, so I risked 30. Market goes up. My buy side is up 30. And I close it out. Did I make 30? Because I got 30 of profit on this side, but I lost 14 over here. So I really only made 16 bucks. Right. Does that make sense? So if I risked 30, I don't know if it's going to go up or down. How do I know when to get out? When one of these two here says 30 plus the losing side risk. Does that make sense? So on this one, I'd want it to say 30 plus 14, right? I'd want it to be at 44 and close it out. Now this one went all the way up to 54 because I was taking this screenshot to be able to make this slide for you guys. So does that make sense? If you risk 30, then your take profit is when you've got to 30 plus the risk of the other side. That's the way you keep it 1-to-1, and that's the way you get out when you need to get out and not let it come back against you. Don't get greedy. Look what would have happened here if I'd have stayed greedy and held till expiration. Both sides would have lost. Does everybody, yeah, plus fees. Does everybody understand what I just did there? Does everybody understand the 1-to-1 risk-reward ratio? And everybody understand that you have to add the other side on. Say no right now if you didn't understand that. Like, let's make sure everybody got that. Okay, so you understand how I'm not just showing you a nice little, you know, oh, John, you went back to Tuesday afternoon of last November and found one great little. No, that's how you do it, is the 1-to-1. Sharon says, good greed suppressor. It is, Sharon, but you know what's even better? Is, guys, that I'm going to finish up with this real quick and we're going to shut down. But this is not a trade recommendation by any means. This is just simply me logging on here to show you a quick example of how to, I showed you how to manage that trade. Now, let me show you how to really manage that trade. Let's just say that we were wanting to do this strategy right now. Again, I haven't looked at a chart. This is not a trade recommendation. This is simply me showing you how to enter an order. And let's say I wanted to buy this one for, you know, 20 bucks, right? Okay. And then I wanted to sell this one for 85, right? Okay, let me just set this up. So, just as an example. So what did we do? We sold one for about 85. So we got a $15 risk, right? Okay. We bought one for almost 20. So we got about a $20 risk. Okay. So what is our risk on this trade? About 35 bucks. Okay. Now, if you've been with us before, you know how to exit orders, right? Let's just say on this buy side, I want to exit it, or I want to put in a working order. I click it, it opens up. It's automatically marked sell. Why? Well, because I bought it. So if I want to get out of it early and sell it, I open it up and I sell it. But what if I say, hey, I'm going to put in a take profit order. I bought this for $19.75. I want to place a working order to sell it when it gets to a certain price. So, Tamara, what did we say our risk was on this overall trade? We got about 15 here and about 20 here. So we got a $35 risk. So on my buy contract, the one I bought it for, let's just, it's $19.75, but let's just say 20. So plus 35, right? Because I want to make, I'm risking 35, so I want to make 35. So plus 35 equals $55. But what is my risk on the other side? 15. So I want to add 15 to that, right? Everybody remember that? I'm risking 35, so I want to make 35. So I have to, if I bought it for 20, I have to add $35 that I want to make, plus the 15 I'm risking on the other side. So that would be 70 bucks. Everybody understand that? So what I'm doing is I'm going into my order I bought, and I'm saying sell it when it gets to 75. place order. Where is that order? It's in working orders sitting there, and it's going to get me out of it if it gets to 75 bucks. Everybody follow me there? Now, I go to my sell side. I sold this contract. Let's open it. It's already marked buy. So, I sold it at 84.75. So, let's just call it 85 bucks. What was my risk on the overall trade? 35 bucks, right? So 85 minus 35 is 50 bucks, right? And then what's my risk on the other side? About 20. So minus 20, that's $30. So I want to buy this back when it gets down to 30 bucks. Done. Do I have to do anything else? Trade is done. Does that make sense? So Tamara set me up perfectly for that, because when we were talking about one-to-one risk-reward ratios and saying, hey, don't get greedy and don't wait, just get out. You know, when the market's moved up or the market's moved down, when you hit your one-to-one risk-reward ratio, get out. Don't be greedy. Good greed suppressor. She's absolutely right. But that is the next step of that, thank you, Tamara, is I entered my buy, I entered my sell. To keep myself on track, I'm entering my take profit orders. I don't have to do anything except watch, right? This does two things. It keeps you disciplined to where the take profit orders are already in there. It's just going to get you out and you're done. But the other thing it does is, let's say the market's moving really fast and you're watching this go up, 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 and then you're calculating your math and your numbers live, like, okay, am I there yet? Am I not there yet? Wait, where? And then, okay, let me go over into Nadex and let me now try to exit these orders and open an order ticket. And by the time I've done that, the market's moved down here and I lost it. You don't have to do that. It's just, it's there and done. Does that make sense? Does everybody see that? Does everybody see kind of the power of that, how that works? Okay. And understand that you want this particular strategy for volatile markets, higher volume markets, moving markets. Okay. Does that make sense? And then instead of live calculating, just as soon as you place these orders, like, you know, you're looking at your chart, everything's lining up, you're seeing your volume, your ranges, you want to try to get, you know, binaries as, you know, cheap as you can in these ranges. You place your order, and as soon as you place both orders, you go right into this working order so that it's done. If you're trading 20-minute binaries, for example, and you get in right at the open of the 20-minute binary, boom, you place it, you go straight in to do this, you know, at 2:01, and by 2:03, this is done sitting like this. And for 17 minutes, your trade is managed and you're there. Okay. So guys, we can go on and on about this. And, you know, we have some other videos on this I can refer you to. I've already kind of went way over here. I hope this was helpful to you, but I'm going to have to kind of cut us short here. So we talked about how to set it up and the risk to reward ratios. Practice this in demo. Remember I told you earlier, after this strategy I show you, I knew you were going to love it. I knew you were going to be excited about it. Do not get off this webinar and go place a live order on this in a minute. Practice this in your demo account. Get it down, understand it, like, you know, make sure you understand how to manage it and place those working orders. Once again, I showed you where today's recording will be, and where you can watch some past recordings. Also, hop on over and visit us, especially if you want some more information about this strategy, at apexinvesting.com. And, you know, we've got tons of free education over there, step-by-step training courses. You can watch videos on this particular strategy absolutely free. You know, we've got news calendars and deviations. Just visit us over there. Check out some free strategy and system videos. If you have any questions, let us know. Oh, and let's see here. Somebody asked a question. Sharon, this is called a binary strangle. Okay, called a strangle. Not to be morbid, but if you're strangling something or strangling someone, right? Your hands are going on both sides, right? And that's what we're doing, is we're getting a buy and a sell. We're getting on both sides of the market, okay? So it's a strangle, okay? Ezra, hey, hit me up over with a ticket at Apex, and I can get you some info on that. Just send in a ticket and address it to me, okay? All right, guys, thank you very much.